I'm Matt Bouchard with REIT.com, and I'm joined by Brad Case, NAREIT's Senior Vice President of Research and Industry Information. So Brad, 2 months into 2012, how are real estate fundamentals looking, and do they look like they're going to be able to support the strong returns that REITs have been turning in?
Yeah, they continue to look strong, and the real question has been whether there's anything that may disrupt the overall economic recovery, and more we're seeing signs that the economic recovery is firming up. Less investor concern about the strength and the continuation of that recovery. So I think the signs suggest that we can continue to expect firming of operating fundamentals, occupancies, and rent growth.
Now, specifically looking at the industrial sector, which has really seen a surge of late, what's been going on there?
Well, I think that really is a story of the real estate fundamentals. The industrial sector, demand for industrial space goes up when companies are engaging in more trade, whether it's within the country or whether it's external trade. If so, they need more warehouse space, and that's what the industrial REITs provide. And so investors are confident that there's going to be continued growth in trade, both domestically and overseas.
Now, if we could talk about the IPO market a little bit, we're starting to hear some news in the REIT area here. American Realty Capital, Select Income, both have made announcements regarding their offerings. Do you see this as the start of a trend, or are things looking to be more favorable for companies to now come public?
Yeah, it may well be the start of a trend. What happens in many cases is that companies that start out not being publicly traded need what they call an exit strategy, need a way to dispose of their investors' interests in those companies. And one of the ways of doing that is by becoming a publicly traded company, doing an IPO. And so what we're seeing is the first signs of some of those companies that are ready to make that transition, deciding that the transition they want to make is to become publicly traded. I think it has a lot to do with the access that publicly traded REITs have to investment capital that they can use to grow. And this is such an important time to be able to grow. I think they're hoping to get access to that capital for their own growth purposes. And so I think that it's likely we'll see more announcements along those lines.
And lastly, can you touch on the significance of American Tower's conversion to a REIT at the start of this year, and what it means to have a dedicated infrastructure REIT?
Oh yeah, investors have responded very favorably. American Tower has outperformed so far. Since they became a REIT, their investors have gained 6.5%. I think that, again, that may well be the start of a trend, not so much this year, but a longer-term trend of infrastructure types of assets being held within publicly traded REITs. American Tower has a very compelling story for its investors, and investors who have not heretofore had a way to invest in infrastructure are looking at this as the start of sort of an opening up of that asset class to investors through listed REITs.
Brad, thank you so much for joining us. For more on this and other REIT news and analysis, be sure to visit REIT.com.